As we witness the unraveling of a once thriving nation, Venezuela's future hangs in the balance. With its vast oil reserves, once a symbol of prosperity, now serving as a mere reminder of lost opportunities, the country faces an unforgiving enemy: total collapse. But how did this once wealthy South American nation find itself on the brink of ruin? Join us as we embark on a harrowing journey of discovery, delving deep into the dark underbelly of Venezuela's untold stories and unraveling the enigmatic forces that have pushed this once thriving nation to the precipice of total collapse. But before we dive right in, we kindly ask you to support our work with a thumbs up and don't forget to subscribe. Now, let's take it away. Venezuela is situated in the northern part of South America. It's a large country, larger than France and Germany combined. The current population is around 28 million people. Venezuela is surrounded by the Caribbean Sea and the Atlantic Ocean to the north, Guyana to the east, Brazil to the south, and Colombia to the southwest and west. The capital city of Venezuela is Caracas, which serves as the primary center for industry, commerce, education, and tourism. The country is rich in natural resources, especially oil. It has the largest oil reserves in the world. Additionally, Venezuela has significant amounts of natural gas and coal. Before the development of the oil industry, agriculture, fishing, and forestry played central roles in the Venezuelan economy. These sectors contributed to over half of the country's GDP. Coffee is Venezuela's main cash crop, and corn and rice are staple food crops. Venezuela's history dates back to Christopher Columbus's arrival in 1498. European explorers named the region Venezuela as Little Venice because they observed local houses built on stilts above the water. The Spanish established their first permanent settlement in Venezuela in 1523. The country remained under Spanish control for nearly 300 years until it gained independence in the early 19th century. Currently, the inflation rate in Venezuela is a staggering 436%, which means that prices have soared over 4 times higher than the average. This places Venezuela at the top of the list when it comes to countries with the highest inflation rates. Following closely behind is Lebanon, with an inflation rate of 269%. Despite the ongoing civil war, Syria experiences an inflation rate of 139%, while Argentina takes the 4th spot with inflation exceeding 100%. Several other nations are also grappling with severe economic crises. Zimbabwe's inflation rate stands at 75%, Suriname's is at 65%, Sudan's is at 73%, and Iran's at 50%. When we examine the last 12 months, Venezuela had an inflation rate of 167% a year ago, which positioned it as the second highest globally at the time. However, looking back to 1985, Venezuela has consistently faced the dire challenge of extreme inflation, even reaching the dreaded levels of hyperinflation. In 2019, inflation skyrocketed to an astonishing 65,000%. Although there has been some improvement since then, with inflation dropping to 200% in 2022, it still remains alarmingly high. The exchange rate between the US dollar and the Venezuelan bolivar has significantly dropped over the past 5 years. The original bolivar was introduced in 1879, but due to inflation in the early 2000s, it was replaced by the bolivar fuerte in 2008 with a devaluation of 1,000 to 1. This resulted in the removal of 3 zeros from the currency. With hyperinflation, larger banknotes were introduced in 2016 and 2017, followed by even higher denominations in 2018. To address the problem, Venezuela devalued its currency by 100,000 to 1 in 2018, introducing the Bolivar Soberano and a new cryptocurrency. By January 2019, higher denomination notes were issued due to continued hyperinflation. In 2021, Venezuela issued its first million bolivar notes, but they were only worth around 50 cents. In October 2021, a devaluation of 1 million to 1 was implemented, removing 6 zeros from the currency. The official exchange rate is currently around 26 bolivars to 1 US dollar. but it doesn't consider the 3 devaluations that removed 14 zeros from the currency. As a result, most people in Venezuela prefer to use the US dollar instead of the bolivar. Over the past year, less than $10 million worth of transactions have taken place in the bolivar, with only state employees receiving payment in the local currency. Over the past 25 years, oil prices in Venezuela have experienced significant fluctuations. In June 1998, a barrel of oil traded for about $12.50. However, by June 2008, that same barrel was worth over $140. Prices dropped to $46 in December 2008, but rebounded to around $125 per barrel by April 2011. In January 2016, prices fell to $35, then rose to $80 in September 2018, dropping again to $23 in March 2020, reaching a high of $110 in May 2022, and currently stands at around $75. These extreme movements in oil prices demonstrate the cyclical nature of the industry. High prices coincide with a strong global economy and high oil demand, while a downturn in the economy leads to reduced demand and lower prices. For oil-dependent countries like Venezuela, this volatility has a significant impact. When prices are high, they generate substantial profits, but when prices fall, their revenues shrink dramatically. Sensible economists would advise saving a portion of the profits during periods of high prices to cover the downturns. Unfortunately, it seems that Venezuela did not heed this advice, as they lacked prudent economists. Venezuela has the most oil reserves, followed by Saudi Arabia, Canada, Iran, and Iraq. The United Arab Emirates, Russia, Libya, Nigeria, and the US complete the top 10. In the early 20th century, Venezuela discovered commercially viable oil fields and established its first official oil well in 1914. Foreign countries and investments flooded in during the 1920s, turning Venezuela into the world's largest oil exporter by 1928. The industry grew further, making Venezuela the world's 3rd largest oil producer by the late 1930s. This shift from agriculture to oil resulted in a decline in the importance of agriculture to the Venezuelan economy. In 1976, Venezuela nationalized its entire oil industry, seizing assets owned by foreign companies and replacing them with Venezuelan ones. This move led to the loss of ownership and control for major international oil businesses like ExxonMobil and Chevron. Venezuela also expanded overseas by acquiring the US-based company Citgo in 1986, which included refineries in the USA and Europe. In 1999, Hugo Chavez became Venezuela's president and introduced the Bolivarian Revolution, named after Simon Bolivar. Venezuela had high oil prices from 1999 to 2008, which helped since they were a major oil producer. The money was meant for social programs, but mismanagement caused overspending, corruption, and the neglect of the oil industry. Consequently, Venezuela faced inflation, extreme poverty, and shortages of food, medicine, and healthcare, despite rising oil prices. In 2008, global oil prices dropped severely, causing major problems for Venezuela and leading to less income. This problem, known as Dutch disease, happens when a country depends too much on one source of income. Venezuela's economy relied solely on oil, ignoring other sectors, making it vulnerable to oil value decreases or production issues. The Venezuelan economy went into a recession in 2016 after the fall in oil prices. Hugo Chavez died in 2013, and Nicolas Maduro took over as president. Maduro's tenure saw a sharp decline in oil prices, worsening the economic situation. The lack of investment in the oil industry and falling production made the crisis worse. Hyperinflation, shortages of food and medicine, and protests against the government became common. Gasoline shortages were reported in 2017, a disastrous situation for a country with abundant oil reserves. In 2018, Venezuela declared a humanitarian disaster, with over a third of the population losing weight due to food scarcity. Maduro's re-election in 2018 faced corruption allegations, resulting in sanctions by the USA, European Union, and other countries. These sanctions worsened Venezuela's economy and reduced its income and investment potential. The USA, once Venezuela's largest oil buyer, stopped purchasing it. Despite being in a deep recession for 5 years, Venezuela's situation deteriorated due to the impact of sanctions, leading to further income decline and reduced investment prospects for its oil industry. The country with the most oil should be rich, but Venezuela's oil industry and economy have been poorly managed for about 50 years. In 1976, Venezuela nationalized the oil industry to align with its socialist principles. However, by seizing assets, they discouraged foreign investment, leaving the responsibility to Venezuelans to maintain and update the industry. Unfortunately, this didn't happen, causing outdated machinery, inefficiency, and a decline in oil production and revenue. Venezuela relied heavily on oil and neglected other sectors like agriculture, resulting in unemployment, poverty, and dependence on imports. The decline in oil prices in 2014 worsened the situation. Overspending, mismanagement, and corruption allegations aggravated the crisis. Despite national protests and doubts about President Maduro's re-election in 2018, Venezuela faced sanctions and reduced oil markets. With falling production, lost markets, and reduced income, Venezuela sank further into recession. Despite its vast resources, the country struggled to be self-reliant. Recently, Russia negotiated debt restructuring with Venezuela, and the U.S. granted Chevron a license to import Venezuelan oil as debt repayment. However, Venezuela's prospects remain bleak, with limited financial support in export markets, soaring inflation, worthless currency, and high poverty rates. Migration out of the country is increasing due to lost hope. Venezuela's situation is unlikely to change in the next few months, and it may even worsen. Without eligibility to an IMF bailout due to humanitarian issues, Venezuela faces a difficult road ahead.